Hello and welcome to the Baby Giants Investing Podcast. Join us as we chat about the weird and wild world of small cap investing, all while searching for the precious few fast-growing businesses that have a shot at becoming industry giants. This podcast is for entertainment purposes only and is strictly not intended as financial advice. Any opinions are general in nature and do not take into account your personal circumstances, needs, or objectives. Securities mentioned are for illustration purposes only, and this podcast should not influence investment decisions. You should read the relevant PDS and consider speaking to a financial advisor before making investment decisions. Past performance is no indicator of future returns. Podcast guests and their clients may hold positions in the securities discussed in this podcast. All right, well, we're here with Andrew and Claude, back to a full house. It's the middle of quarterly season. Claude's doing some heavy thinking there by the sounds of you breathing. All right, what should we kick off with today? Any good news? Andrew, have you found any good news from doom scrolling Twitter for us?
I'm desperately scrolling, as you know, because I like to be well prepared for these things. No, I can't see anything other than just for fun. Spot ETFs for Bitcoin coming to the ASX very soon. So take that as any way you want.
I've got some software to mute every time you say Bitcoin, so I assume that's what you're talking about.
Not powerful enough.
That's Matt's good news. I have a new software widget that mutes you each time.
No, very good. One other one actually that I think it was being trialed in New Zealand as well, but a cancer melanoma cure is being trialed. So it's using the mRNA vaccine to have a specific to your cancer vaccine for people who are suffering from melanoma, which I think could be pretty awesome. Yeah, 132,000 people are affected globally by melanoma. And the idea would be that they use the cancer cells themselves to create a specific vaccine for it so that your body's immune system fights the cancer directly, which I think is pretty cool.
That is cool.
I love vaccines.
About time. Can we just get going with the cure for cancer already? I've been waiting a while for that. I've been living a lifestyle that's kind of hanging pretty heavily on this eventual cure. So,
Not to take away anything from mRNA vaccines, which I loved and I still think cured my long COVID. Well, I know it did because the timing was just bang. I think that, the data is as well, that some of the old vaccines can last longer. So the Novavax COVID vaccine, I really want Australia to get that. I feel like I'd try that actually. It turns out the statistics in now and it probably has a much slower waning. I'm not sure why that is.
Yeah, I mean, I think that these vaccines you're like the guy just demanding answers from the world's leading scientists. Like, what's up, guys? Why have you done that? But I think that the cancer vaccines are the most promising thing I've seen because you can have it could potentially be applicable to a whole range of different cancers where they just sample the cancer and give you a vaccine for your cancer. I just think it's wild. So maybe the progress is finally there, Andrew.
Yeah, I mean, then the next wave of that is then a bunch of that'll be the next bubble on the market as people sort of leverage that tech and sort of spruik it as
sure.
All kinds of different things, but we'll see.
For sure. All right, if there's no other good news, should we jump into some quarterlies? What quarterlies have caught your eye? So we're in the midst of quarterly season. We'll probably be chatting about them next week as well. Last day today for quarterly, so all the good ones will be out today, I'm sure. But yeah,
I was going hard yesterday. I was looking at every single quarterly that came out, and my God, that even on a good day for the quarterlies, there is a lot of detritus.
Yeah,
in there. It's just coming across these old companies that I haven't thought about or looked at for years, and you're like, oh my God, I can't believe that's still going. What was the one I shared with you guys with LiveHire? Literally in 2019, I think it was, I wrote an article called "Time to Die LiveHire," and my argument was this thing.
Oh no, Mr. Claude, it is you who LiveHire is still going.
How is it still alive? It had at that time an 80 million market cap or whatever, and I was look, this thing has 35 million in cash. It's not too late to just wrap it up, give the people their money back, no harm, no foul. I said the company has around 35 million in cash and we believe it should be returned to shareholders since we believe the business is destined to fail and the business itself is worth nothing at best. Fast forward 5 years and the share price has gone from, the equivalent share price then was, somewhere around 40 cents or something. And it's down to less than 2 cents. So that's a 95% drop. And somehow it's still alive. And still burning cash.
Well, it's that cash, man. Yeah, it's still got, I don't know if they raised
it's
again.
It's just spent the 35 million. What? It's got 5 years later, 4.8 million. What?
Yeah.
Who does this? Why did you do it? Like, just give everyone the... Anyway, but like, that's why you got to watch out for in cashed up businesses that manage to like, this is why like...
It's kind of genius. Like,
yeah.
In a really evil kind of way.
Yeah. So it's like the way it works is like, Andrew sometimes, you know, is like, oh, the share price is up, they raise capital, you're good on them, blah, blah, blah. Yeah, it's logical, it's rational to do. But what can happen is that what happens is some nothing business with no revenue, like tiny bit whammo, can get right up and like get a high share price, raise capital. But like, if you don't actually get revenues and business profits and free cash flow, what will happen is it could take 5 years. Could take 10 years. Like, they're just going to spend the money. And so for whoever's in control there, you know, that you could be 10 years. Like, people do it for longer. You could be 10 years, 15
That's my
years.
point.
Yeah.
So what we do, we're going to buy a shell company, like, you know, something that's on the ASX. That's, you know, we'll reverse list into that. We raise a bunch of money on a big story.
There's no other way. In a Perth company, it has to be a Perth shell, and it has to have a history in mining and biotech. I won't accept just one, Andrew.
And then we just pay ourselves 500 grand a year for like as long as we can. And then when it all goes to zero, I mean, it's not quite the burn that I think people think. For the insiders, it's like, oh my God, your business went to zero. What a disaster. No. I sat twiddling my thumbs in a nice office for 5 years. And this is, I mean, I don't want to name names, but there was a few years ago.
We're dropping truth bombs this morning.
Well, there was a lot of companies I came across in the startup scene, and it was none of it made sense. And it was until I realized that actually that's the grift here. It's not to ever reach cash flow positivity or generate money in any way, shape, or form. It's just to like LARP into like, I'm going to be a businessman. I'm going to be an entrepreneur. I'm going to do this. Let's get some beanbags and some kombucha on tap, and let's just have a lot of fun for the next few years. And eventually, and the thing is, the founders haven't put any of their own money into it. And I kind of look at it in retrospect and go, that's probably a better way to do things.
Yeah, like, just to clarify,
you know, they're putting.
Andrew's not talking about any specific company and not LiveHire. Like, that doesn't fit LiveHire. I'm sure the founders put money into it, etc., etc.
Dude, I met a founder of a business who had an app where you would meet people for dinner in a different city, and they raised at $6 million. They didn't raise $6 million, but they raised at a valuation of $6 million, and they hadn't even built the software yet. It was a pitch deck, right? And that's how mad things got. But I mean, it's not a mile away as to some of the things that go on the ASX. So it's just, I don't know. It's horrible, and I wish nothing but bad things for the perpetrators of this. But then you do look at it at a certain angle, and it's like, once you understand the incentives for those that are playing this game, it's kind of like, yeah, it makes perfect sense. It makes absolutely perfect sense. And this is, you know, for why you've got to be so careful as an investor, and a small cap investor in particular, is that, are you just feeding the lifestyle of a bunch of grifters, or are you buying a part of a business that will one day be a much bigger actual business, like a business that makes money? The
various, you know, exactly what you're talking about, the various injustices, the sort of repetitive, it's the same trap that keeps on being set for people in small caps, in micro caps. Like, it lights a fire under me, and I try and, like, I've got to the point now where basically 90% of the time, like, I can't call out stuff anymore because people come at me too hard. And it just, you know, I'm just a dude who, when I was like more of a nobody, could really say what I thought a lot more. And now that I have a little bit more of a platform, like, it comes back and it's a pain in my side. Like, what I actually crave for now is to go back to like having a much smaller audience where I can just sort of say what I want. Like, back when it wasn't even a website, it was just an email kind of thing.
Well, hopefully people will stop listening to this and we can.
Yeah. No, well, like, at least I think the Baby Giants listeners are pretty niche and a good crowd. So I feel like that's why it's like, you know, in some ways the most.
You're in a safe space.
Yeah. Well, you guys are just going to agree with me, right? Like, okay.
I know what you mean. I think, there's people who become, it's exactly the worst companies that get the most ardent kind of fundamentalist kind of fans, right? Because there's not as much there. And so it's like, I think they know often that there's not that much there that's supporting what they think. And that's why they're so angry to defend it, basically. It's like, if you're confident in a company that you like, you're not really worried. Like if you're really confident in something, you're not really worried when someone says something negative about it. If you're not that confident, it's very dangerous.
Yeah, that's a tell right there, right? Like the more upset someone gets, if you state an opinion calmly, without emotion, without ad hominem attacks or anything like that, and just say, I'm a bit concerned about this company for X, Y, and Z, and someone comes at you pretty hard, and they're an insider in the company, that is the biggest red alert that you can have. You may need to cut this. We spoke of on this pod very early on,
like Matt, as we wade into editing hell. Like
I feel as we're justified in saying this. We're very early on in this pod. We all put the boot into pretty hard, and someone from that organization, no names, reached out and said that was a very unfair comments that you made. And then I got back and said, "Oh, I'm so sorry. We'd love to clear the record, and do you want to come on and we'll talk about it. Let us know what we misunderstood." And then they never came back after that. But we know kind of how that trajectory has gone, and it's just, I don't know, it's more a heuristic than anything else. But I think you make a good point, Matt. If someone's particularly upset with a reasonable opinion that happens to be negative, then that's a tell.
Yeah, maybe we'll just bleep out the company name.
I do think it's fine though if we do lay into a company. It's fine for them to come on and have a chat and tell their side of the story. I feel like that's a good offer that you made.
Actually, that was Tiny Beans, right? Like we had
Tiny Beans.
It wasn't like we put the boot into it. It was just like we had a couple of.
When you say that was Tiny Beans, that wasn't the company you were just talking about.
No, that was not the company.
Tiny Beans is a good example of someone who was.
And he came on and had a crack and put their case, but unfortunately, I think Tiny Beans is a tough business and hasn't managed to pull it off.
Yeah, but I mean, that was the point though, right? It was just like, hey, there's another side to this, and it was like, I think you do yourself a disservice as an investor. No, I don't want to hear it. It's like, well, obviously, hear it. What they've got to say.
That's a massive disservice.
Yeah. Like you got to steel man the arguments of the other side, right? If you're an investor, like whether you're bullish or bearish, steel man the other side of the argument, right? You should,
or another approach, Andrew. You drop your share price by about 80% and rename the company. How about that?
Which
perfect segue to
there you go. Yeah.
Articore Group.
Articore.
Yeah. Any you guys ever heard of Articore Group?
I've never heard of Articore.
What could it be?
It sounds Articore. Is it a portmanteau or whatever it's called? Like is it a
Oh, you mean like what was it?
Art?
Kelsian was
something like. Yeah.
Like rejumbled. No, Articore is the new name for Redbubble, which is obviously one of the basically that was
an example.
It's a turning point for me because I got so triggered by that moment when you're like, I see the truth, and like it happens to everyone. There's people that are like, having their eyebrow twitch every time they think about Pro Medicus because it's too expensive. But for me, it was like Redbubble because it was just, there was so many like fly-by-night YouTuber now deleted their channel. That's what it was. I got triggered by this guy who was like putting out blogs in favor of Redbubble, putting out all these videos on YouTube and stuff like that. Since all taken down, of course, and building these followers, getting 16,000 people on Twitter, blah, blah, blah. It's like where social media about stocks for a moment there, it stopped being about like any kind of care for the quality of the content that people were getting. People were just like, I come on, I talk how great stocks are. I literally know nothing, can't do a DCF, just pretend I can. My viewers also don't know that I can't, they can't do DCFs. I can't do DCFs. The blind leading the blind stuff. The Redbubble thing just got that wave massively because Redbubble tried to spoon feed this to people in their triple helix flywheel or whatever it was. Yeah, it just got my goat anyway. So they obviously actually in the end reality caught up with them. They are of course a business that just sells clothes online, not unlike Satire, which is also treading an interesting path, though I never managed to get a great
pretty different business, fairly different business models, but yeah, I get what you're saying.
Yeah, it's very different business models. But look, anyway, Articore now has gone through a lot. I think it's probably fair to say now, like the fake narrative has really died. Like revenue down, gross profit is sort of flat-ish. They're increasing their margins, so optimizing more for profitability to sort of where they're trying to get to. And still still amazingly, I had to, do a double take, still losing money, operating a bit to negative.
And not just the gross margin improvement, but their operating expenses dropped 25% as well. So they've really taken a knife to everything.
Yeah,
and
so they're definitely trying to be profitable now, which is good. And so like the strategy of like just hype the idea and make the share price go wee and all of that sort of stuff is not going to work anymore. And so they are actually trying to get profitable. Obviously, it's quite a seasonable business. So this Q3 is one of the weaker quarters that they've just reported on. So definitely don't extrapolate that number that I just read out. And also probably worth noting that it's an improvement on the prior corresponding period. So overall, you have to say that with the share price coming down massively and also the strategy now more about focusing on profit, this dog may yet have another day, but will it ever get back to its old highs? So it went above $6, now it's 42 cents. Look, no, I mean, maybe it will, but it's not that good a business. You got to model this out as a low margin retailer, essentially. And then, look at typically retailers are trading on a multiple of earnings and stuff. So you're basically trying to guess what the sustainable level of earnings are for Articore Group. And I'm not there yet, but I'm not negative on it anymore. It's got the right strategy now. So let's see how profitable it can get.
I mean, economics aside, they're making close to $80 million a quarter in marketplace revenue. Like they've got users, right?
Yeah.
Well, it's just whether it works. It's sort of, are the unit economics kind of there? Was this a case of, well, we've talked about it before, but it's just sort of like, is this a reasonably decent revenue line just a pure consequence of, have you paid for that revenue through marketing? And does it work without that? And that's still in question to me.
Yeah. So if you look back and at the half-year result, the profit before tax of $6 million on total revenue, which includes the share that goes straight to the artist of $300 million, that implies a pretty slim profit before tax margin of just under 2%. That is realistic and sustainable, in my opinion. Like, in fact, they could even improve from there. Just under 2%, you're getting in distribution style margins. So you could even see that getting a bit higher. You could probably see 10, 15, 20 million profit. It's possible. Like, I don't know if they're going to do it, but it's possible. But like, say you get 10 million in profit, then I think 20, I don't really see that for them in the near term, but I could see them getting 10 million and their market cap now is 120 million. So if they actually did transition to profitability, then suddenly they might be kind of reasonably priced for a retailer, potential upside, should that ever eventuate.
Do you think some of the AI stuff is a risk for these guys? I mean, the artists producing some pretty cool stuff out there, but the AI is producing pretty cool stuff as well. So that might change the business model as well.
It's actually a really interesting question. And I think that what the limiting factor when someone's shopping on Redbubble, right? Like, I think that it's not like no one's like, oh, I'm going to go to Redbubble and just like peruse their millions of designs. It's like I have in mind a specific t-shirt. I want this.
Yes. Yep.
And I think that the risk always is that, for someone, it's actually easier to just go to a print your own t-shirt kind of opportunity. And like, if you've got a picture that you made with AI, long story short, yes, I think the AI makes it incrementally easier for someone to be like, I want a picture of this, rather than finding a best match on the internet, which obviously includes Redbubble and other brands that are similar. It might be more feasible to just print it yourself.
Yeah. I want an image
you
of
can
this.
have a site where you generate, like, yeah, I could imagine that, Andrew. I don't think it's quite there because I don't think the AI generation is quite good enough when it comes to like the words, which people would often want. As you know, if you generate anything that like AI somehow figures out words just from images, but not quite, like it misspells the word or whatever. But it's like, a couple of generations from here, then it starts spelling the words correctly. And I think that becomes, you could just have a site that AI generates and then prints on demand.
Yeah.
And then,
Yep.
I think that makes sense. And if it doesn't, it
maybe that's a business idea. Maybe we
really
should be doing that, like AI t-shirts. Right. Like that's
okay.
Who wants to?
We're going to reverse list it into.
That's the idea. Yes.
AI t-shirt. We need a better name. AI wearables or something.
Yeah.
All right, listeners, get in touch. Who has a Perth mining shell lying around? Let's do it.
Yeah.
All right. I know some of you fundies listen to this. Someone must have one.
Yeah. Let's just work out our STIs first, and then we'll go from there.
All right, what else? What else has come through? So what's caught your eye, Andrew?
Oh, it's about XRF. That's 16th of April. Their results came out. I don't think we mentioned it. I mean, what's not to like about XRF? It's just, I mean, revenue and profit for the quarter, up 13 and 15% respectively. Year to date, pre-tax profit up 14%, revenue up 8%. Just getting it done. All divisions up, good tailwinds, good management. It's just a really, really nice business. Yeah, I don't know anything to add. I just thought it was a good result. It's being recognized a bit more now, I think, by the market. So it's not quite the bargain that it once was. But yeah, I'm still a happy holder. Been on the Strawman Index since 48 cents in 2021, so it's done well for us.
Do you have any thoughts on that one, Claude?
Yeah, so I own this one. I have to admit, I think probably a fair few people on Strawman were ahead of me on this one. Look, what I like about it is that it sort of has a sort of razor plus blade business model, which is whereby they do make a lot of money and it's important to sell these capital equipment machines, but also then they sell the X-ray flux, the consumable thing. And that gives them, that's the transaction-based revenue that I really like, okay? Because it's not guaranteed, but it's beautiful because it means that your own growth arises from someone else's capital expenditure, basically. So, some mine wants to go and start testing what their samples are, and whatever it is, like whenever, and software companies leverage this a lot as well. Like someone else is trying to grow a business, well, like they need all these tools to grow a business. So I really like that side of it. Also, I really do I've developed, I guess, a bit of trust for the CEO. He's been quite long serving now. He was willing to, I think more like they do quite a bit of investor relations stuff nowadays. I think just a reasonable amount, but he, was pretty happy to be like given a call and asked questions, try and get my head around the business, like quite a long time ago when the business was still quite small. I haven't seen any bad behavior. Like I haven't seen them like trying to pump the share price and dump shares or anything like that. They seem like, and it's just so rare to find like people that behave nicely, to have a good business, good people. Gosh, you're halfway there. And then even now, look, in the most recent quarter, I think profit before tax was down a little wee bit in the preceding one. So I wouldn't necessarily, bake in heaps and heaps of growth. And it can be out of their hands. It could go down if mining capex spend goes down. But either way, you're probably looking at business that it's in the, I guess, $12 to $18 million profit before tax. So over the next couple of years, it's bouncing around that range. Like it's a reasonable PE ratio depending on where you estimate it and what time period you're estimating for. Like it's not priced for eye-watering growth. It's just priced for, I guess, reasonable growth. And yeah, when you find good people and what you think is a good business model, then that ticks lots of boxes. And even as I talk about it, I'm like, oh damn, I should have bought a few more shares in this one. But yeah, I still like it, I guess. The share prices run a little bit, obviously it jumps 20 cents recently, and then after that everyone's like, oh, I should have bought shares. So psychologically I'll probably just let it settle and see what I think. But yeah, I like the business.
The other lament, and this is a common one for me, is I bought it at 26 cents years ago.
Oh dude, it kills me. You should have held out.
No, it's not the end of the story. The end of the story is I sold out between 50 and 67 cents thinking, nailed it. It's a little bit expensive. It's a little bit expensive now. And you start doing all this stupid stuff. And it's like, I mean, here's a business that they made some good long-term investments and they started to reap the rewards of that. They saw revenue grow sort of CAGR at 20% in recent years, but the profit has been growing at 35%. So they've not only grown, but they've scaled, or they've realized some operating leverage along the way. And yeah, they are very much dependent.
You just made me check my share site. I had a feeling that I'd done something similar. I just checked in May 2020 during the COVID panic. I bought XRF at 21 cents. And
it would have been around the same time as me. Yeah.
In June, I sold it for 23 cents or something like that. Fucking a little quick 10%, hey? Oh my God, that hurts.
Idiots.
What is wrong with me?
Yeah, I know.
So dumb.
I think it's probably around fair value now. I wouldn't call it cheap. I'm happy to hold. I've re-added it to my Strawman portfolio just recently and correcting an error of judgment in selling it out. Gold price has been on a tear, as you guys know, and that's been really good for these guys. So I like that they've got a little bit of they're not too dependent on any one particular commodity or sector. So that's kind of nice. Yeah, anyway, I'm a fan. You any thoughts, Matt?
Yeah, no, I think that the one thing to keep an eye on is like where we are in the mining cycle, because if you look like long term enough, it has had these periods where it kind of goes into better margins and then worse margins. And like even the consumable segment, I think earnings before tax kind of fell from 2013. It's kind of around 2019 before they think they got back above. That's what I had anyway. say, at least at a margin level. Yeah, so I think that that's just something to think about. I don't think that we're in like a crazy mining boom right now, but it's just something to keep in mind of if there is more exploration work and potentially what's kind of happening a bit with the gold price. That's something that can be slightly cyclical, even though it is a consumable for a lot of their work. And some of their sales are capital sales as well. So
that's the lumpy side of things. Yeah.
But yeah, I think I agree with everything you said. High quality business. I was just going to say the interesting thing is the photon assay, fire assay stuff that they're doing. So yeah, part of their business is kind of providing crushers for fire assay, which is a way to test, I guess, primarily for gold and silver, primarily gold. But yeah, it's kind of this change of methods, which maybe sets up talking about Chrysos, because that was another company that reported its quarterlies. The traditional method of doing this testing is a fire assay where you're putting your sample and basically cooking it in a furnace and a bunch of other stuff to see how much gold is in there, versus this new thing developed by Chrysos, which is photon assay, basically using photon accelerator, I guess. I don't know. It's nuclear imaging of the exciting the particles, seeing that the gold vibrates more and kind of taking an image to detect the gold without destroying the sample and without having to, use those other methods. Yeah, so anyway, I just think it's interesting. I think that the XRF seems to be probably more neutral to it than I thought before. I don't know if you guys had any thoughts on that, like its dependence on fire assay versus photon, but they seem to be supplying to photon as well in the crushing. I don't know if you guys had any other thoughts, whether they're more exposed to fire or photon.
Not on that. I think the point you made is that either way their crushers are used. So, that it shouldn't matter for them. And I guess also you seem very across this. Did you happen to talk to Chrysos or XRF recently in WA?
Yeah, I actually went. Chrysos had a day where they opened up for one of their customers, Intertech, so one of the testing laboratories, and had a lot of investors over there. So that was one of the things I saw on the Perth trip. So anyway, Chrysos, I think it's an interesting one. It had become a bit of a darling amongst some of the brokers, and its price had got up to quite a high multiple of sales, maybe 9-ish times sales, which is pretty high for a very capital intensive product. Basically, they make these huge testing machines. They're the size of like a few shipping containers. It's a nuclear technology, so there's like potential radiation involved and special shielding and stuff. Their goal is to replace fire assay around the world. It's an interesting one because I guess my take is that they had got the share price had started baking in converting all of the market, or a very large share of the market, from this fire assay, the traditional process, to photon assay. And I felt like one of those moments where brokers really like to do something in an Excel spreadsheet where they can just drag the cell across. You know what I mean? Like they can just assume if we have like this much penetration this year, we'll have this much next year, and like drag it across and see
the same rate.
Exactly. And just really, just modeling, although it's an Excel spreadsheet, instead of all the like messy complexity of the real world adoption and whatever. And I think it got to that point where everyone was assuming like quite high penetration and like, oh, but it could do even more and whatever else. I came away, I think now like the stock's down maybe 20% since that day and since the quarterly came out. And one of the other things that had always been there, it's been there since like 2022, but they hadn't really made new sales. So the way their model works is they have this pipeline of units where they've agreed, people will install them, and then they're slowly like building them at a rate of, around 18-ish a year to try and build them to meet that demand. And so the story had been, there's this just huge wall of demand. They can't meet it fast enough, and therefore they're going to, grow exponentially, and we don't need to worry about the demand side. And I think that started to change in people's minds. But it was just looking at the numbers, it always seemed surprising to me. Like if you look at the number of lease agreements they have, it rose up to 48 lease agreements in December 2022. It went to 49. But it's just been flat there for, several quarters now. Since December 2022, there's only been one new lease agreement made. So it's a year, there's only been one new kind of sale added to the top of the pipeline. And the kind of messaging was that, they've now deployed about half of those. So they deployed 27 as of the latest quarterly, and total lease agreements is 50. But basically, you've kind of got this messaging that, we just don't want to delay or have customers wait too long to get it. And I can kind of get that, but I kind of think I wouldn't care about that at all. Like you look at, I would just pre-sell the whole industry, right? Like, and have everyone waiting for it and maybe have them bid up more to get it faster. And so I think now people are questioning, hey, actually it's been whatever it is, 6 quarters and we haven't really seen any new sales. And then in this quarter, part of the reason there was like the deployment rate is slower than had originally been expected is that they're saying it's harder to get things deployed, that the customers aren't ready for them. Once Chrysos does manufacture them, they have to go and put down some hardened concrete to take it because it's such a big unit. And so now brokers, there's like the shadow of doubt creeping in where people are like, oh, actually there hasn't been new sales for quite a while, and when they do try to deliver them, they're not necessarily ready to be delivered. It's just interesting to see that like narrative change, because I think that that's a pretty core part of the thesis.
Yeah,
I love that focus on the sociology to understand the Chrysos share price journey. I could not agree with you more. I think a long time ago on the way up, you could tell that this was one of those like sociologically boosted stocks. I'm pretty sure, from memory, it was a bit of a Motley Fool favorite. On top of that, I know that the momentum traders, at Equity Story liked it. And this is how momentum works, right? Like the share price keeps going up and then it has a halo effect. The brokers, as you were saying, they all like it. And the question is why, right? Well, and this sometimes happens in businesses that are a bit capital intensive because the growth is exciting and that's a narrative that can get the share price up, but also the brokers are like falling over themselves to be friends with the company because they also make money at the capital raising stage. So really, the company would like the share price to go up and up and up, and then they do a capital raising. The brokers would like that to happen. And the guys that are onto the ride and bought, probably a fairly full price, but then are now sitting on a gain of 50%, 80% in 6 months or a year, they love it as well. And so kind of you've got this everyone happy moment there where everyone's like pulling in the same direction. And especially if it's like a pretty decent business, either there's no one's going to like really bother sticking their neck out to be like, oh, this is a bad business or whatever. So you kind of just like people either just get out of the way and sit it out, or like they get on board. And if you get on board, of course, the risk is you get on too late, right? Because it is probably best think of this as a sociological thing. Like you've got this inflated expectations, even though it probably is a decent business that probably does have, these sort of quasi recurring revenues. Like there's a sociological factor that's happening here as well. So generally speaking, if you want to say that the cycle started turning on Chrysos, like probably you could even argue only like kind of recently with this result would be like a key pivot. Like if that's the case, and there's starting to be like leaky holes in the narrative now, like you're really going to have, in my opinion, there'll be people that are more cognizant that what they were doing was a momentum thing, and they'd already be out, right? Because they're just looking at a chart or whatever. If they weren't out when it sort of peaked and dropped, then they'll definitely be out now because they're seeing like the second big drop, and they'll walk away for quite a long time because that chart won't look like what they want it to look for a really long time. So you're going to lose that crowd no matter what. Then you've got people that might have got in quite early. They're still probably sitting on a profit. Probably a lot of those people are like, oh, I'm a long-term investor, I buy quality and stuff like that, and they'll stay put. But they'll also, there are some people now that are going to be like starting to, realize that the narrative that as they had previously understood it wasn't true. And then there'll be fundamental investors too who are like, hey, I had this thesis. The facts are coming in as you just outlined, Matt, and that's breaking it. So overall, if we analyze this from a sociological perspective, I have not even touched on the valuation. Sociologically, I'll be like, I'm going to probably leave that one alone for a while.
Yeah.
By which I mean not have anything to do with it.
Yeah, no, I think that's a great point. I always like Bruce's thing of a long-term investment is a short-term investment that goes badly or something.
That's so true
for a lot of people.
Gosh, that's true.
Yeah, there's one other thing I didn't mention, which was on the tour, the thesis is, when I say the brokers like it because they input the models, I mean, it's not just the dragging the growth, because I guess you can do that for anything. It's also that Chrysos had put out this target, or say that the total market opportunity is 600 units. And, they've sold 50 so far and implemented 25.
It's the old aspirational target, man. Like, I'm pretty sure Redbubble, Articore had those as well back in the day. Like, I don't like them.
It's the TAM. I think, because especially a unit-based TAM, you can just put it into an Excel model so easily. You just go, okay, well, they'll add this many this year, and just keep doing it like that. But the core part of that idea is that everything will move to photon assay. And when we're on the Intertech tour, I asked, how much of your processing is photon versus fire assay, and they said it was 60% photon. And I said, okay, that's still like a lot that's still being done by fire assay, 40%. And I asked, like, do you think that will change? Do you think like you'll have more photon or fire? And the answer was that they didn't think it would change, and that if there was more exploration work, there could be more fire assay, like the mix could shift more to fire assay in future. And that kind of made me question this whole idea that there's going to be the whole market go to photon. And I was just stunned because no one else is really, I asked like many times to clarify that question on the tour with a lot of other people, and no one else seemed to really care about it. But I don't know. We'll see if that becomes like a
2,000-year-old technology. It's very well established and proven and cost effective. So
I would be quaking if I was like in some fat position in Chrysos right now. I don't know anything about the valuation. Like, this is not even an informed opinion, but just based on the narrative we've been talking about, like, I feel like it's not going to hold up.
We spoke to Dirk Treasure, I think it was October last year, founder and CEO. I think there's a lot to like about the business, but to your point about the valuation.
I don't think that's in question. Yeah.
No, I mean, it's got a great opportunity here. And look, by the way, their growth is short of what they sort of led the market to expect, but it's still pretty strong. However, it is 10 times revenues, 10 times forward revenues for FY24, almost, maybe 9 times, something like that. So there's a lot, even with the price going from 850 back to 570-ish, there's a rather full valuation in there. But I like there's a lot to like about the company, I think.
Yeah, and I guess everyone can make their own assumptions. How much of that do you think converts? But yeah, it's those moments where you're early in a journey and people assume like full or a large share of penetration. There's so much that it's just hard in the real world, and I think that's what they're bumping up against. So
it's so hard. It's such a tricky line for companies to walk, right? Imagine us again. So we reverse listed into our WA shell company, and let's say we've actually got some cool tech, and we are genuinely bullish about it, and we need some money to build this and market this and staff and you want to tell a story that is positive and that you genuinely believe. And then the market asks for more details. You go, well, I think we can do this. And it's just hope springs eternal, right? And then you've got the IR people in there going, oh, do you think this? And then, they sort of like really sort of push it as well. You paint yourself into a corner where it's sort of like things that don't start off too nefarious. You then have these targets that are just maybe in hindsight look a little bit too ambitious, and even in contrast with something that is still attractive, maybe not as attractive as you may have envisaged or not as soon as you envisaged, but still good. But you are then incentivized to take riskier decisions to meet these targets. And it's this, a lot of companies just grow themselves broke, right? Because they set these expectations. I mean, I'm not the first person to make the comment, but I really do think companies do themselves a disservice by getting sucked into those games where it's just like, just don't give a forecast. Like, well, we think there's a big market. We think we can do well here. We're excited, but just walk back from these specific targets, because it's either you hit them and everyone goes, well, that's what we expected anyway, so you don't do that.
Where's the beat?
Or you don't, and everyone thinks you're a scammer. So it's sort of,
Yep, I agree. I think one other point on the incentives, just with brokers, with these types of companies, is also it's really capital intensive. So they're going to need to keep raising a lot of money along the way, which that's how brokers earn their fees, basically. And there should be a Chinese wall between the two, but that's the incentive to put out research. And then also there's potential for big sell downs, because I think it's still partly owned by CSIRO. So there's stuff coming out of escrow and all that kind of stuff. But anyway, as I said, I think I've talked to Dirk as well. I think really good team, but it's just maybe a case, as Claude said, the sociological impacts.
Yeah. Look, I reckon it'd be one to, I want to come across too harsh on it. Like, I literally have just put a pin in it because I could see the sociological setup, and I was like, I'm going to wait till that plays out. And then
you always need to beat expectations, right? For a stock to go up, it has to beat expectations.
Come and have a sniff around the ruins.
You can't have everything expected.
I mean, you could have bought at the beginning of last year for $3, and despite everything, you've still done incredibly well here, right? So again, it's just paying a sensible price, ignoring the volume. I'm sure in the fullness of time, anyone around that level will still be reasonably happy. It's a great example of what happens when the hype train really starts to build up speed and things kind of decouple from reality a little bit, even though the company is delivering pretty decent results.
Did they raised in 2022 at $6.50 per share, right? Is that correct?
Yeah, it was a pretty busted IPO for a while.
I mean,
Yeah.
Well done.
Good on you.
It's like, no, it's fine. It's not bad. They're only a little bit underneath it. It's no worries at all. Like, I wouldn't judge them at all for that. It's fine.
Yeah. I mean, again, put yourself in that situation. You go, no, we don't want to raise. We're going to raise money, but we're going to raise it $3 instead because it's the right thing to do. Like, what? No.
I've seen far worse IPOs than that. They're down like 12%. Like, no worries. Like, that's fine.
Yeah.
All right, cool. What else has caught your eye, guys?
I feel as though we did Dropsuite recently, but I don't think we did. So should we touch on that?
Yeah.
It's been 2 quarters since we did on the podcast.
I thought we might have touched on it when you were away, Claude, but
maybe we did.
My memory is just blurs. Look, it was a good result. I find it one of these companies where it's sort of, when they release their metrics, they're all moving in the right direction, right? It is a very scalable, profitable business where it's users, margins, revenues, average revenue per user, operating cash flow. It's just all going in the right direction. There seems to be a lot of, I think the big concern here is that they will be outcompeted by bigger players, and with Microsoft launching its own sort of in-house sort of service for all of this. And I think there's a reasonable case to be made there, but I do sometimes think that gets overstated given the size of the market, the opportunity, and the fact that I think a lot of people will miss the fact that you actually want third parties doing your backup, not the same party that is providing all of your services. And to remember too that the real customers here are the managed service providers, not the institutions that are ultimately making use of these products. So I like the CEO. I think he's a very smart cookie. I think he's very well aligned. I like the business, and I help. I don't know if you guys have any thoughts.
Well, you have it on Strawman.
I have it on Strawman. Yeah.
I was just going to chuck in some negatives since I also own shares. I don't want this to be like a positive fest. So some of the things that I didn't like.
No chance of that when you're around, Claude.
Yeah, man, I'll keep it on the straight and narrow, mate.
Claude, wet blanket Walker.
I like it's for companies he owns shares in too.
Andrew's starry-eyed optimism page.
They know it's meant with love, right?
So I love it.
I've got no problem. Like, intellectually, I'm not criticizing this, but the CEO said that the company would be aiming for a profit result roughly in line with last year. And he argued essentially it was a mistake. It would be a mistake to focus on profit growth given it's already sustainable and cashed up. Like, it's already profitable, mildly profitable, and has 20 million in cash. And basically he's saying, there's an opportunity to grow organically right now. I guess he means at good returns on invested capital, so let's take it, kind of thing. And whilst I agree with that from a long-term point of view, what I really, really want from a sociological point of view is for it to grow profit every single year now, like just by a certain percent, right? Like, so even if it's just like 15% profit growth or 20% profit growth, because like you were saying earlier, like brokers love that. Like, let's just grow it at like 15% every single year without fail, or just a percent, and then people will just start extrapolating it, and then it'll be fun for shareholders. That's sort of the short-term point of view I have. But otherwise, look, long-term, obviously, if the ROI is there, it makes sense to do what they're doing. So not really criticizing it, just more from a sociological point of view. And then the other one was they did, and I like that they're reporting that they do talk about the negatives themselves, which makes me like their integrity. But we did see an increase in churn to under 5%, which reflected competitors competing on price. Basically, when they sell Dropsuite through a distributor who then sells it to the MSPs, they don't have as much engagement with the MSPs. The CEO highlighted that, more of this churn was coming from these MSP customers that they didn't engage with as much. So they're expanding their customer success teams in order to try and make sure that they are engaging with all the MSPs, including those contracted through distributors. Can't criticize that. Actually quite heartening to see that he has, obviously already reacted with this very slight increase in churn, which you definitely want a company that does say, oh, churn's gone up. How do we try and rectify that? That is 100% what you want to see. So that's a negative. I like the response to it. Yeah, overall, steady as she goes from my point of view.
I'll give another negative, and shout out to Mike Brizzy, just a legend on Strawman. He made the point that we're not yet seeing scale. We've seen incredible growth in receipts, the customer receipts, but all that money any money that's being made is being reinvested. It's being expensed. So the accounting treatment's very conservative, but we're not yet seeing that operating leverage emerge. Sharif has mentioned to us in the past that he thinks the business is at scale able to operate at a 20% EBITDA margin, but it's not coming there yet. So the question is all of this cash being reinvested to just help them remain competitive, or is it allowing them to sort of accelerate ahead of others? Jury's out. And I think that's a fair comment, actually, because we may look back in future periods and go, yeah, it was absolutely the right thing to do. They're far superior product. They've got a lot more market share than they otherwise would have. Or it was just like, yeah, they've spent a lot of money, but those EBITDA margins or those profit margins, operating margins, aren't going to land where we may have initially expected them to. So it's something to bear in mind.
Cool.
Did you have a comment on that one, Matt? You want to rag on it?
My thoughts?
No. Yeah, I have had the same concerns from it, which is just around whether it's going to generate high cash flow margins, whether it's actually got quite a big cost of just, it's not, I don't think it's as much marketing in this case. Like often the problem with small tech companies on the ASX is they sometimes never get those economics because they have to spend on marketing. But this one, it's more just where they have to keep spending on product development to keep up with all the other companies that do the same thing. And that's the challenge I have. I don't think that's necessarily a thesis killer. It's probably just more like getting the valuation right for it. But there is a lot of companies that do backup and storage, and they do seem to be getting some traction and doing a bit better than them. But that, that does erode over time if someone else develops new features. And that's the thread of why we, as Peter Thiel says, competition is for losers. Why is competition so annoying? Having to always improve your software stack is its own form of, a cost. So that's probably where I'd see the issue potentially coming from Dropsuite, for at least not putting as high a valuation as like comparing it to, some of the other software giants like Pro Medicus or whatever else, where there isn't that same cost that you have to keep spending a lot on, which depresses margins. So yeah, that'd probably be all that I'd say.
Isn't that just another reminder too of how special it is when you can find a company where the value proposition is so compelling that people seek you out? Like they are rare. Right.
Yeah, it's much better, isn't it? It's way better.
When you have to, even when you've got a good product, but you really have to go to a lot of effort and cost to sort of make the point as to why you are worth considering. It's just a trickier path to tread, and that shouldn't be too critical, because that's most businesses, right? It's always easier to sort of say, I would love a business that does X, Y, and Z, but it's like you have very few sort of tick everything on the wish list. But again, a reminder that when you do see things like that, it's like they're pretty special.
Yeah. And I think I think especially small tech companies get too easily compared to big tech companies.
Yes.
And I think that part of it is that we're in, SaaS has been around for a while now, where we were kind of in that sweet spot, 10, 12 years ago, where these companies were the first to market, or at least the companies that would, like a Xero or something. And if you had a network effect, you could kind of get there. Whereas if you were launching like a new Xero competitor today, it wouldn't be very successful, right?
No.
Like even if it was as good as Xero was at the time, if that makes sense. Even if you had a Rod Drury-esque person and all that stuff. So I think that's something to keep in mind. If you're looking at technology now, you need to be a bit more differentiated, I think, or have something else that you're doing that, or a new niche or something else that's new and different. Otherwise, you're going to probably get stuck in a competitive trap in some way.
So true.
Awesome. All right, should we wrap it up there, gents? Any other thoughts?
I mean, I was going to say, I did joke beforehand, EnviroSuite and Ava Risk Group had results out as well, but I'm so sick of talking about them, so let's just pass. I'm selling down and have sold down on EnviroSuite there, just by the way. Talk about a growth company that's really not growing that much. So damn. Yeah.
And it has such big ARR. You've really got a deep dive on the quality of ARR, don't you? I think we've discussed that before.
I dug up a Michael Porter post, What is Strategy? Which, just Google it, you'll find it. Gosh, it's a great post. And it just reminded me of a lot of things that you see here is like companies that try to do too much too early. EnviroSuite's a classic example here. I will stand by my original thesis, which was their industrial, the Omnis product, whatever it's renamed 1,000 times. Great product, great segment. It's been continually growing very well. And they bought this aircraft noise monitoring business that was like 10 times bigger than them. It's just madness. Then they incubated a startup inside the business with water and look, great potential. Maybe I'll eat my own hat in years to come. But it's just this. Mike Porter makes the case of just focus exclusively on what you do really well. Just because you can do something doesn't mean you should do something. And I just like the number of companies that have Catapult's another great example, right? Like, gosh, I just seem to be attracted to these things where it's just like there's this nugget there's a part of the business which is just beautiful, and it just gets muddied by, as you say, Claude, empire building and trying to be too much too soon to too many people. And it very rarely ends well. Whereas those companies that just relentlessly focus on, we do this. This is what we do really well. We do it better than anyone else. We're just not interested in vertical synergies or whatever, other kind of nonsense that is there. It may often mean that you end up being a smaller business if you're trying to measure it by revenue or, something like that. Profitability is off the charts, and the returns to shareholders tend to be a lot better as well. So I don't know. Read the article, Google it. It's timeless, and it's a good reminder, I think, of to beware companies that are trying to be too much too soon.
What article is this again?
It's called What is Strategy by Michael Porter.
Yeah.
I think it was
good tip, mate.
Yeah. And his 5 courses is, Michael, there's great YouTube stuff on it. Yeah, seek it out, read it, learn it, absorb it.
All right, shall we do some gratitude?
Yeah.
My gratitude was going to be that we're not doing gratitude this week.
Well, that can be your one then.
Go on.
All the good. That's the Grinch has come out after his rant.
I'm a cynical Gen Xer.
I'm grateful for your educational lesson there, mate, sharing some of your pain so we all may learn. I'm grateful for that. You really give a lot of heart into it. And I'll keep it simple. Moving house soon, but yeah, just grateful to have a house, to have a family home or whatever, and have that stable environment for my kids. That I think it's a good thing to give them, and very rewarding. So that's mine for today.
I'll say give Andrew some more time to think. I'll say grateful for kids. I think kids, they have such like youthful naivety and energy, and kind of like frame you see the world in a different way being around them, and they're not always positive, but they do, when they are positive, they're just like this unbridled positive, and I just think it's kind of cool to hang around. So the kids, the boys are like 4 years old now, got another little girl, and had a lot of fun with the kids.
Yeah, well, I'm coming into the teenage years, and I can tell you,
this is gratitude.
And the thing is that really rubs me is that I was exactly this. I see that now, and so I have a little whinge to my parents, and they think they are loving it, right? So, but someone said to me recently, actually, maybe I'm repeating myself here, but the saying was, with kids, the days are long, but the years are short. And it's like, yes, that is so true. Because I've got a friend who's sort of coming out of the nappy phase, and they're sleeping through the night. And I just like, God, I remember that. It was just so long, and long days and very painful, but just blink and it's gone. So you're right to be grateful for it, Matt, because it won't be long before they're telling you that you're an idiot and shut up, and I know everything and you know nothing. And
you still have to be grateful.
We're just going to wait here until you say
I think actually I find gratitude in the small things as I get
Name
older.
one.
Okay, I'll give you one. In recent, it's not a recent thing, but in recent years, I've really gotten into walking. I do a lot of walking and a lot of thinking and walking. It's just
you do a reasonable
walking
amount
in
of
nature.
No, sorry, just kidding.
Not quality thinking.
Walking in nature is cracking, and I reckon there's probably some science. There's some science around that being good for you. And
it is 100%.
Well. It's just phenomenal,
mentally, physically.
Yeah,
like forest bathing or something they called it.
Yeah, nice.
Sweet.
Nice.
All right, well done, mate. That was a great
very
one.
good.
Thank you, everybody. Yep. Thanks for bearing with us as we got it out of him, everybody. Hope you have a lovely day.
All right, thanks, guys.
See ya.